Hey, what's up, guys? It's Jonathan here. So I constantly get the question, what's the better investment, stocks or real estate? And typically I have the same exact answer each time. But in 2021, there's been some new factors that have been added to that equation that makes it a little bit more complicated to answer. So in this video, we're going to discuss which investment is better for currently right now in 2021. Is it stocks or is it real estate? And some of the factors that may sway your decision on which one that you should focus on investing into. So without further ado, let's get right into the video. But before we do that, please hit the like button for the YouTube algorithm. It greatly helps out the channel and helps push this video out to as many people as possible. So let's first start off with real estate. For me, real estate is my favorite investment out of the two. It has very great tax benefits. Real estate doesn't deal with some of the crazy flash crashes that you see in the stock market. And the price of real estate tends to be a lot more stable. And also the real kicker with real estate is that you have the ability to be able to buy real estate under market value and then be able to add value to a property, basically almost guaranteeing you a return. But recently, the landscape of investing in real estate has changed. Ever since the beginning of COVID, there's been a strong lack of inventory in the market. And this is caused mostly because there's people who want to sell their homes, but they don't want random people walking to their home, obviously because we're in the middle of a pandemic. But then at the same time too, you have higher income earners who are moving away from the city into the suburbs and are having a hard time finding homes to live in. And on top of lack of inventory, the Federal Reserve has also moved to lower interest rates on mortgages. Those two things in tandem are causing home prices to increase at a very alarming rate. I know for me in my market, it's almost impossible to buy a home without paying at least $50,000 to $100,000 over list price. And just to give you some perspective, the median home price in my area is about $400,000. So that means that people are paying almost a 20% premium just to buy a home. And because of that, it becomes very hard to find undervalued real estate. And because of these crazy bidding wars, it almost causes you to pay so much that it actually gets rid of your margin that you have made from fixing up the home. So now if you want to invest in real estate, really the only way you can get good deals is by looking off market. And trying to find off market real estate deals can be very time consuming. Now with stocks, it's a lot easier to invest in real estate. You don't have to go out and you don't have to look for good investment properties. It takes a lot less time to buy stocks versus real estate, where in real estate you have to go through the whole escrow process, which could take anywhere from a month up to almost 2 months. Where in stocks, you could literally just open up your phone and swipe up on Robinhood and boom, you just bought stocks. But some of the downsides with stocks is that you're always constantly buying at market value. Unlike real estate where you could buy something under market value and then add value to the asset, with stocks, you have to buy it at market value and hope that the value of the stock goes up over time. The only way that the value of a stock moves up over time is usually out of your control, and it's in the control of the people who are running the company. At the beginning of the pandemic, there was about a 30% sell-off in the stock market. But ever since that time, the stock market has just gone up and has hit new all-time highs. And when the value of stocks move up in a very short period of time, it creates risk for people who are buying in as the market is going up. But just recently, we have seen some corrections to all of this euphoria that we've seen since around the summer of 2020. But recently, we have seen some pullback in the market ever since this run started about the beginning of the summer of 2020. So right now presents itself as a really good opportunity to add to your stock positions. Now, since I've gone over some of the factors of how these two assets have acted during the pandemic, you may wonder, okay, so which asset is the better investment for 2021? And that depends mostly on many different factors. One of the things you have to consider is, how is your local housing market? Is it extremely competitive? From what I know, most housing markets, at least in the United States, has been very competitive. no matter if you're in an urban city like me or if you're in a really rural area. Also, another thing you have to ask yourself is how much liquidity do you want? If you were to buy a piece of real estate, you may have a hard time liquidating it, even if you try to take a loan out against the home. Right now, it's very difficult for you to take out home equity line of credits, or for you to even get a refinance done. I've heard in some cases refinances could take even up to like 60 days when normally they take about 20. So that is something to keep in mind, that if you do need cash very quickly and you invest in real estate right now, you may have a very difficult time liquidating your investment. How much time do you actually have on your hands? Do you have hours to scour your area for possible off-market deals? And in some cases, you may be better off using that time to do something else, like run your business or maybe even start a YouTube channel. But nevertheless, these are just some factors you should consider if you want to get into either real estate or stocks in 2021. Before the pandemic started, I was saving up money to buy another rental property. Once I saw the market decline so sharply at the beginning of the pandemic, I decided to get all of my down payment money and put it into the stock market. And due to that investment, I was able to double my money, which is awesome. But the problem with that is that I live in California. Because most of the gains that I made on this money are short-term capital gains, I would have to pay at my ordinary income rate. Given that my ordinary income tax rate is about 35%, that means I would have to fork over about $10,000 to $15,000 more to the IRS, versus if I just wait another year and then sell the stocks as long-term capital gains, where I would only pay a tax rate of about 15%. And given that my stock portfolio isn't big enough for me to take out enough margin to be able to buy a house, I'm kind of in this position where I really wouldn't have a way to get enough money to make a down payment on an investment property. And then to top all of this, when the pandemic did start and the CARES Act was passed, I did apply for mortgage forbearance. Pretty much what mortgage forbearance is that you can forego making your payments on your mortgage for a certain amount of time, and those payments will be added to the back of your mortgage. And basically the play is that the money that you would have used to pay your mortgage, you put that money into the stock market and you let it grow over time, essentially allowing that money to almost double before you have to pay off those mortgage payments. Most of the reason why I applied for it was because I just wanted to have more cash on hand, because I really didn't know what was going to happen during this pandemic. And so it was kind of like a way for me to protect myself. But also, on the other hand, it was also a way for me to be able to take advantage of any opportunities that may have came up during the duration of the pandemic. So for me, my mortgage forbearance period ends somewhere around the summertime. And during the time that your mortgage is in forbearance, you're not allowed to qualify for another mortgage or home equity line of credit during your forbearance period. On top of my tax situation and mortgage forbearance, housing demand is so high right now that I'm very afraid that I may have to overpay to be able to buy a deal. And overpaying sometimes is fine, especially if your plan is to buy and hold for like next 10 to 20 years. But for me, I just don't see the value of paying all that money in taxes and then overpaying in real estate on top of it. So with all of these things considered, my goal is mostly just to focus on buying stocks for at least until the end of the summertime. And the biggest reason why for this is because my mortgage forbearance period will be over. But then also, on top of that, in the summertime, there's a lot of hope that we will return to normal to some degree. And I think that this returning to normal will help ease up the real estate markets. So then I'll be able to find a good deal and not have to overpay for it. But I'm curious to know what you guys are thinking about. Are you guys planning on continuing to buy real estate? Are you guys looking at stocks? Are you looking at other kinds of investments? Let me know in the comment section below what your investment strategy is for 2021. But anyways, I'd like to thank you guys for watching. If you enjoyed this video, please hit the like button, subscribe button, and notification bell so you get notified anytime I post a new video. Follow me on all my social media accounts. I try to post there daily. And thank you for watching. Until next time.